Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q1 FY26 post earnings conference call of SKP Bearing Industries Limited. Today on the call, we have with us Mr. Srinand Palshikar, Chairman and Managing Director, along with the management team. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to quickly run us through the presentation uploaded to the exchanges with their growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to you. Over to the management team. Please go ahead.
Shripada?
Yes. Hello. A very good afternoon to all present here. We have gathered here today for the earnings call for Q1 FY26 of SKP Bearing Industries Limited. How we will move forward, some key highlights about us, business overview, etc. Our main key highlights for the Q1 this year is that the France entity is improving on the strategies which we had planned. So we are focusing on technology exchange. There is no change in methods or manpower, but some projections of customers is a bit changed, but otherwise it's on ramp. Our plant 2 is optimized. We have started working and production from plant 3 has also started. Because of the capacity, the space which was packed because of the ball production is now opened up. So now we can plan for further lines in plant 2 as well. France turnaround is expected in a few next few results. Also, PM Kusum scheme initiation has also been started. Revenue is also expected from this scheme. We can see that in this year, this quarter's highlights. Our standalone income statement, revenue from operations has become 13.6 crores. As for our expenditure and EBITDA is on screen. This is our consolidated statement. So on a consolidated revenue is for around 22.1 crores. A brief highlight about SKP for those who are new with us. SKP was founded in the year 1991. We began with needle rollers, which we gradually expanded into cylindrical steel balls, pins, and many others. We are a high quality manufacturer of rolling elements with IATF certification. We are giving into various sectors. Also, we are a global source for global customers. Our brief journey, we were established in the year 91. In 2004, we expanded to a new facility on Mulchand Road. In 2006, we started our renewable energy initiative. In 2007, we were QMS certified in plant 2 as well. In 2010, we installed windmills in various other locations. So we have expanded the renewable energy front. In 2011, our founder received the National Award for Outstanding Woman Entrepreneur of India. In 2014, we ventured into solar. So solar was installed in Madhya Pradesh in 2014. In 2018, we acquired a steel ball manufacturing plant. So in 2018, our balls journey started. In 20, we further expanded both the unit 2 as well as the ball capacity. In 22, we became listed on NSE SME platform, July 2022. And in 2024, we acquired a company, French company, Ballet Edouard Industries. Our board of directors, Mr. SK Parshikar, Mrs. Sangeeta Parshikar, Mr. Kishore Parikh, and Mr. Rajiv Lokri. A brief overview of our manufacturing facilities. Plant 1 is specialized in needles and cylindricals. Earlier, we started with needles. Then that entire facility was shifted to Plant 2. Now, Plant 1 is being used as a research and development facility. Plant 3 is specially dedicated for ball manufacturing. Some of our product range: needle rollers, cylindrical rollers, precision pins. These pins are used for various applications like gearbox, etc. And steel balls. Our France portfolio, it's complementary products. So on France portfolio, making of various chemistries, like we are doing stainless steel, brass, aluminium, coated balls, etc. And also miniature balls, so from 0.6 mm up to 16 mm. Our current utilization of existing roller plant is approximately around 89%. Ball utilization for the previous plant. New plant is not considered over here. Our domestic and export breakup. Some of our strategies for a profitable growth. We as SKP diversify our products into complementary as well as value addition for our customers. So, we are offering tailor-made solution for certain customers. In that case, we have a high margin on such products. Operational efficiency in as a part of our green energy initiative and the reduction of our operational cost, we are focusing on energy as well as on latest technologies for improved operational efficiency. Also, we are adding considering our global leverage. So we have a plant in India, we have a plant in France, in two different continents. So we are leveraging this the strength for acquiring new overseas and global customers, which form a stable revenue uh, pipeline. Also, some other technologies transfer from France and India. Technology synergy is ongoing between the two plants. Some of our key strengths, like we mentioned, we are one of the major manufacturer of multiple rolling elements under a single roof. Also, we are one such company with two manufacturing plants in two different continents. Also, our overall team is more than 135 years of collective experience. A bit on the industry overview. Some of our green energy initiatives. So the way forward, looking forward, we are planning to fully bring the Jammer plant, the plant 3, to ramp up. Also, the France subsidy, while it's completed its first year, it's loss making, but we are expected it to turn around in the coming year, like we've mentioned in the slide. Renewable energy sector is also ramping up because of our PM Kusum Yojana, which is started generating revenue. Also considering our export oriented vision, so that front is also expected to improve despite the choppy waters ahead. And considering both the plants, we are in the process of technological synergy. So the technology transfer is happening between the two plants. Some of our annual financials as well. Just fast forwarding because we've seen this earlier.
Shall we move to the Q&A?
Yes, please. No problem.
Just end this share. Thank you. We'll take the first question from Somil Shah. Somil, please go ahead.
Yeah, hi, good afternoon. Uh, as we are seeing, our France plant will be, I mean, you are saying that it will be break even by next year. So, how much revenues can we expect for this year and for the next year overall on a company level, and at what EBITDA margins?
For the France plant, what we have planned uh, around the revenue targets for the current year, current financial year, that is 25-26, is between 3 to 4 million euros. That is the current year target. Next year, we target to increase this particular revenues. This is the increase. How much it will be? If giving the projections right now is very very difficult, because we have a very global situation, big global situation right now. All the countries are facing the same situation, but this is when it was not there. We were projecting something like between 5 millions to 6 million euros projection target for next year. That was a situations few months back. And when we were going to do between 5 million to 6 million, it was a green situation. Current year it will be like just around 5 25 26. It would have been just uh, sufficient turnaround like that.
And at what EBITDA margins for this year?
There is no EBITDA considered. If it will be loss, it will be less loss.
Okay, and how about our India plant? So, on an overall basis, what is your revenue projection for 20 FY25 and FY26? I mean, sorry, FY26 and FY27.
Yes. So current year we have a projection of 100 plus. This is what is our for the consolidated level, where all the entities put together is 100 plus for this particular year, which was last year we were projecting 100, 100, 200 and 400. That was a projection, but then we have so many delays and so many challenges what we are facing. Because of that, we will have to revise all our projections now. But overall a period of time, it will be the growth will be like that, but utilization and actual performance will be uh, uh, this year we are projecting 100 plus. That is 25 26 26 27, we will be anywhere between 150 to 200. This is what is our projections.
And this year, since you are saying from the France project, will be having EBITDA negative. So, on a console basis, what are we targeting? So, even our PAT will be negative?
No. So console level, it will be still we are, if, this was the most challenging period. So console level, we are still positive. So now it will be I think will be positive.
Okay, and how about our debt levels? What is our current debt on books?
Shripada, can you just show
Yes, sir. I'll show the presentation.
just that date? Otherwise, you can just say also what is the current date level in the quarter.
Okay. And what are we projecting by end of the year? Will it be
No,
reduced
we
compared
are
to?
investing hugely because we are currently focusing on our all expansions, because ball expansion is more or less is on completion side. Plant 3, all our investments is more or less on completion side. We are talking of utilization of that particular plant. We are now usually investing already in plant 2 to expand our current capacities from the level what we are to doubling our capacities. That is what was our plan. I think you were not there in previous sessions, so you are not aware. But we are planning to increase our capacities, because we are already running at around 90% levels in current plan. And when you are in engineering industries, the utilization of around 80-90% is considered to be very good. But we have a good projections for next years. So we are expanding our capacities on our plant 2. We are already huge capex planned for next 1 or 2 years. So we will not be reducing our debt level. Of course, we can do that thing anytime, but then we are not. We are investing more in our capex. This is what is our plan.
Okay.
The current level, Shilpada, what is current level? And around 25 crore, I think so.
Hello.
What is the current?
Around
It's
28.
around that, around 25.
28. Yeah.
So
Correct.
by year end, what are we targeting? So
We
how
no
much?
change in this. We are because we are doing capex.
So it will be increased or it will be similar level?
Same level.
Okay. Okay. That's it from my side. Thank you and all the best.
Thank you, Soumil. Anybody who wishes to ask a question, please use the option of raise hand. We'll take the next question from Suruchi Parmar. Please go ahead.
Yeah, good morning, good afternoon, sir. Actually, I'm new to the company, so just like to have a view on your strategy of acquiring a France business regarding the products and regarding the customers and your strategy of expanding in exports in next 2 to 3 years view.
Good question. Uh, the acquisition, French company acquisition, which itself is very risky and very challenging type of takeover. This particular acquisition is done with a very clear futuristic view. Technologically, we have very good assets base over there. So the technology what we have over there can be transferred to India. That's number one. Number two, we have since this company is in existence is past 80, 90 years. So we have a clientele which is spread over globally, global clientele base. We have all premier customers to this particular organization. From India, we have been trying for some customers even that we couldn't able to crack for past many years. We could able to go those customers on board to in India also now. So we have the customer serving from France also and from India also. So these are the things advantages we have. We have integration. We can do supply raw materials from India to that plant. We can utilize those. We can bring down our cost. We have many cost advantages. So those cost and advantages can be shifted from India to France. So these are the synergies which is there. So we have a for any organizations you need revenue. So for that we have a very clear view as to okay we can have this particular revenue target. This particular company VGI was doing something like 16 million euros 10 years back. In 2010 they were around at a level of around 16 million. So these are the potentials. Now, how do you reach to that particular potential is to bring back all the customers which are lost, which we are already working, number one. Number two, get all the business volumes which we have lost over a period of time and to get new businesses. Thirdly, to offer the two sides to the customers from India side and the French side. The customer got a, very advantage. I'll give you a very typical example of current situation. We have been subjected to a big duty structure to export to USA. We have a clientele base which our competitors supplying from India side to the USA is now subjected to 50% duties. Okay, as a country, it's not looks okay. But when you take as a consolidated view as a multinational, you have advantage. Okay, to supply to them from France unit to them because that customer is also approved. We are approved supplier to the same customers for the USA. So he has now an advantage. Okay, he can source from India. He can source from European site. So these are the advantages what we are supplying to our customers. So the tagline, which is a global supplier to a global customers, this is a very clear. And this was a drive. Those who are there since many years, or those who are saying they were present in our previous earners calls also, they must have seen we always use a tagline of global supplier to our global customers. So this is the advantages what we are providing, and this is a strategic view for the global customers. I hope I have answered all your questions.
Yeah. Just one more thing. You have a ball's capacity utilization of right now 50%. So still you have a scope to increase it. still you have added a more capacity of 2,000 tons per annum. So are you seeing a major like order or something coming in for which you have already planned this capacity utilization?
Okay, another good questions. I would like to this particular thing. I would like to elaborate more. I'm not sure many of investors or many of people who are present over here are aware about the situation. Okay, India is driving towards quality control orders for bearings and elements. So this particular order is under implementation stage now. It's already gone through various phases because this is a big implementations. It has to be done through a WTO. It's countrywide objections and in national levels and international levels. So these are the stages, and this particular orders once implemented, all the companies globally, India and outside India, has to comply to the standards, the requirements. We being quality manufacturers are already complying to all the requirements of the standards. So our advantage is that, number one. Number two, there are many companies which are in India but importing on a large basis, on large basis, very large basis. I can give you just one example. A global import for just commodity bearing and rolling elements in one just one calendar month is in crores. It's more than 1000 crore. Okay, so this is the potential what is available now. We have already projected this particular futuristic requirement 2 years back, so 3 years back, and in this particular line we have created capacities which is available to our customers, quality customers, when the need is going to be arrived. So we are right now in gearing up stage for all our rolling elements to offer to all our customers a quality product for future.
Okay. Okay, thank you so much, sir, and all the very best.
Thank you. We'll take the next question from Nikhil Asrani. Please go ahead.
Yeah, hello. Am I audible?
Yes, Nikhil.
Yeah, I have a couple of questions. Maybe I joined a little late, so sorry if I am asking the same question again. For Q1FY26, you have done 22 crores in revenue on a consolidated level, right? What is the projection you see, if you can give any guidance for the next 2 years? First question. And the growth would come from volume mainly or pricing power? Second, for the CapEx, are there any fundraisers planned? And if yes, how? And third thing, what you mentioned in your PPT is the PM Kusum scheme, which you're seeing some order inflow or whatever. Can you guide specifically if what are the on that scheme particularly how much we can plan to make? So these are my three questions.
Sorry. I'll start from the bottom. That's very quick. So PM Kusum is basically a pure rationalization of our revenue. So this is a very fixed income type of thing, which is we have a very clear top line and a bottom line. There is no fluctuation in this particular. Everything is nature. So all solar energy generation. This is a first project being commissioned in this particular scheme. So this is a fixed income sort of a thing. So it is purely in investment, which is solar and getting diverted to sold to government. Okay, that's number one. Number two, you asked one question for the capex. Yes, I have already highlighted to you. We have a capex, huge capex plan for a roller. We have already placed order with multiple segments where debottlenecking is required. So these all. So we are investing hugely into AI functions for next generation. So this is already being done. Implementation, everything is in advanced stage. We are projecting the implementations in Q3 and Q4. This is a phased manner. Similarly, we are expanding our capacities in various segments where we are already bottleneck. Okay, so more or less our projection, our increase is what is we are supposed for the roller. At currently we are at level of 100. We are projecting to double the capacities in the next 1 to 2 years period of time. Okay. Now for the ball, we have already created the capacities. I have already broadly outlined how we are going to utilize offering the solutions to the customers. We are in a stage of commissioning, improvisations, meeting customer requirement. We are in sample submissions, discussion with customers for auditing, approving. So all this phase is right now on. Customer also is about the QCO. Those people who are aware about the QCO, quality control order for bearings and component. So this will be the implementation by the end of the year from the government. So once we will, before this implementation is fully done, we will be fully ready to receive the orders and serve to the customer. So our capacity is of 200 tons. What is there for the ball plant is already identified customer wise, allocated customer wise. We are talking of them about sample submissions and utilization of this particular once the approval is done. So this process is on for ball. For roller, already capex is going on. So we are not going to borrow additionally from outside. We are going to do with internal resources and from directors and secured loans. So this is the way we are going to meet our requirement. We are not going to take any new from new funding or nothing like that right now. We have no plans currently as on date.
Okay, thank you. And what is the revenue projection and PAT projection you see for the next 2 years after the France turnaround? Sorry if I missed it.
Yeah, that's what I have already broadly. So we are planned for this current year 100 plus. This is what is our plan. Number one. Number two, we had projected certain revenues for France, but current situations, I'm not sure as to what exactly effects are going to come from globally for India entity and for a French entity. It could be very positive also. I'm very so projections is okay. I can project maybe this year we are doing for 100 plus for this. Next year we were doing for France, we were projecting something like 5 to 6. If we keep that, suppose we keep it at level of 5, we do around 80 or 90 for India entity. So we will be something like 140, 150 for the next year. So this is roughly is all the projections, and next to that will be something like in the line with this.
And you see the French subsidiary being EBITDA positive next year?
This is what is the plan.
Okay. And just last thing, currently, what is our domestic and export split? If you have a split currently, how much we are exporting, how much percentage of revenues, and what is the projection for the next 2 years?
Shilpa, can you answer?
Yes, the last year FY25 and the export was around 5% of the overall revenue, and this year is expected to be on the same level.
So technically, tariffs anyways, we are not getting affected anyways right now because our export is only 5% right now of the total revenue. As of now, the tariffs anyways don't impact us. Future
No.
we don't know, but we have a plan to increase the exports.
Yes, but the export is not to US directly. We are exporting to other continents.
Okay.
That's right.
Okay. Fair enough. Thank you.
Thank you, Nikhil. We'll take the next question from Mohit Shah. Please go ahead.
Thank you for the opportunity. Can you throw some light on what led to the growth in Q1 since we don't have a comparative quarter available? And can you share some thoughts on how have we grown in Q1 for standalone basis and what is the profitability and growth status for this France business?
We were projecting a larger positive side. We couldn't able to do it on that much of high utilizations because of we have a limitations. Our ball plant is not in a position to fully receive the customers because we are in sample submission stage, customer approval stage. These are all big OEMs, not small OEMs. So the capacity of 200 tons will be consumed fully by just 3 or 4 customers, not much. So this is already, it takes little time for them. Already visits are undertaken, evaluation is going on, sample submission is going on. So this process is already on. So this is for ball. For the roller, we are already at fully utilized capacity. So whatever gaps were there, little gaps were there. If you would have seen our previous thing, we were utilization around 85%. We are now closer to 90%. So we are stretching all our limit of the current capacities to make it fully utilized. So this is why you see what is little growth. The real growth will come when we will implement the new the lines, which new AI lines, which is going to come in Q3, when we are going to have a substantial increase in the revenues when the new lines will fully start functioning.
Okay, and my another question is like, what is the view considering the current tariff uncertainties, and how much of this will impact our exports or business from France?
I've already explained to you. If you have seen my tagline, a global supply to global base, global customers. A customer which is for which I am approved in India, or for which I am approved in Europe, or for which I am approved in USA, Latin America, Japan, China. Okay, I have offered him two sites, two manufacturing sites. If he finds it's not competitive to get it from India, he can get it from France. You understand? So these are the opportunities which we offer to our customers. We are already highlighting to them, okay, this is approved plant, this is approved plant. If you have a problem from this country specific importation, please start importing from that. We can do a capacity allocation from that particular plant. So this is the opportunity we are presenting, but this is, right now, a transition stage. It's not an implementation stage. So when you start a implementation, still USA is giving windows to countrywide. Okay, you have this window, this window, this window. So this type of decision making at such a level, it takes little time also. Not everybody is so quick to take a decisions, and these are critical components. So, but this is phase is going on right now. So revenue shifts from this continent to that continent, opportunities from both the plants. These are the opportunities which are available, and we are gearing up ourselves to receive all the opportunities wherever we get.
Okay, sir, got it. Thank you.
Thank you, Mohit. We'll take the next question from Pooja Kadam. Please go ahead.
Hello, good afternoon. Sir, how is this France unit helping us to transfer the technologies and use those technologies in India?
See, there are certain very good points when you say a technology, just not the technologies which we call it in our industries, a good point. So we have many good points, which are, we can call it as a technologically upper hand. So these are the things which were available over there. It's not like that we don't have certain good points. We have certain good points. So that is being implemented over there, and certain good points which is over there. I don't want to go in much detail because this is like a business, something business special. So I don't want to discuss those things in detail. But yes, there are technological many advantages available over there, and technological many advantages available in India. We are integrating those two.
Okay. And how is our new plant ramping up in India?
Uh, 200 tons is the projected volumes. We are just sample submissions. There are certain requirements, quality requirements, which customer requires. Already visits are going on. So the customer specified, okay, we have this requirement. You need to fine tune. These are the things. All these things going on right now.
And what is the total revenue potential of the new plant?
Yes, that's a good question. So if you take the capacity is around 200 tons, because it fluctuates depending on the sizes what you get, the volume requirement from certain sizes, If you do make more larger sizes, the volume, the quantity means the tonnage will increase. But if you do a smaller sizes, the tonnage, but we are projecting something like 200 tons. You can take the average value realizations of around something like 220 per kg, something like 47 crores is the potential at stage one.
Okay, thank you, sir.
Thank you, Pooja. We'll take the next question from Ayush Khanna. Please go ahead.
Good afternoon, sir. So my first question is, what would be the current capacity utilization of those local plants, that plant 1, plant 2, and plant 3 in India?
Plant one is basically we do our own R&D, do our own machine building, something like that. So this is an old plant, very old plant. When we started in 91, this is very limited. Plant two is a proper manufacturing plant where currently ball and roller manufacturing is being done. The ball plant is all lines are getting shifted to plant three. The phase is already 80% is completed. Still 20% of some certain machines are still balanced, which is to be shifted. So we are focusing on these all activities, and plant 3 is a proper chrome steel high quality manufacturing plant, and this is the current focus.
All right. So, man, the question is that what can be, the projected capacity utilization for FY26?
I'll explain again. For plant 3, which is up to 100 tons uh, full potential volumes, we have already customer tie-up. That customer is identified. We have volume this much, this volume this much, this much. So customer tie-up is already done. Commercial is already settled. Now it's a phase of sample submissions, quality approvals, testing. This phase is on. Once that is done, we have a production runs. We have initial small production runs. Then you have a regular production. So these are the phases. So we are in the phase of with different customers in different stages.
All right. And my last question would be that what are the key industries contributing to SKP bearing in terms of revenue and how diversified it is in the revenue mix?
Globally,
Yeah, like,
yes, we are well diversified. We have a presence in pharma. We have a presence in cosmetics. We have presence in EV. We have a presence in defense sector. We have presence in automotive. We have presence in textile. We have presence in industrial. I'm not sure which sector is left.
okay, so that's it from my side. Thank you so much.
Thank you, Ayush. We'll take the follow-up question from Mohit Shah. Please go ahead.
Sir, my follow-up question is, how has the company's focus on high quality and low friction products with global certifications affected its market share in client base?
We are on the highest level of quality.
Okay, and what are the company's plans to improve its operating margins, particularly in its India business?
I think we are at a very good margins. I think you need to analyze it properly. See, we have first time declaring Q1, and this was a requirement. This was the request from many of my old investors to have a more transparency and more, to reach to the company progress on a better scale. So even though we are in SME, we have done first time a quarterly results. We will be doing henceforth a quarterly results. But if you will see on quarter to quarter, see there are certain factors which are, once in a year you do this particular you do this type of like O&M contracts with major agencies are done usually in first quarter. So these are the things like, but then margins are, oh, I think we are one of the best industry margins.
Okay, sir, great. Thank you.
Thank you, Mohit. We'll take the follow-up question from Suruchi Parmar. Please go ahead.
Yeah, sir. Thank you for taking me again. Just wanted to have a view on your standalone operating margins from year 2002. It was around about 48%, and it has now dropped up to 39%. So can you give a view on this?
I've just answered this question. Just now I answered this question.
Okay,
For
okay.
the question is the same.
And what about this taxation part in the consolidated portion? When we are looking for this quarter also, it's going moving up to 67-70% taxation. So how, at what percentage we can consider it?
This is a when you do a clubbing and when you do a consolidations, you're clubbing all the thing. So this is regularly you have to analyze a standalone individually. You have to do an analysis, do a subsection and do a analysis like that. You have to do analysis. It's the same standard because in France we are loss making, so there is no question of taxation. In India, we are a regular taxpayer, so that the standard. So you need to analyze that independently and then do a clubbing.
Okay, okay. Thank you so much.
So there's one question in the chat from Mr. Srinivasan. What is the company's plan for migration to main board as we are completing 3 years in SME, and any timelines that we can expect for the same?
We have a plan to do it next year because we completed 3 years just now. So the requirement from the NSC is 3 years of complete. So we completed now, and in previous financial we should be 100 plus. So these are the two other criteria we are already fulfilled. So that is why I said we are already targeting for 100 plus this year. So let us hope when we do this, we will be migrating to the main board.
Thank you, sir. Anybody wishes to ask a question, please use the option of raise hand. Sir, since there are no further questions, would you like to give any closing comments?
Uh, I just want to say one thing to my investors, long-term investors. See, we are a engineering focused product manufacturing company. We are not like we are not like you do and you get it very quick results like that. It takes time. There are certain machines, there are certain production lines. The lead time is more than 1 year, maybe 2 years also. It takes time to stabilize those things. Also, it takes time. So the investors who want to with our work with us, they need to have patience. Number one, that's very important. Number two, they have to see overall what is our drive. Our drive is very clear: global supplier to global customers. We are receiving approvals for such customers. We are global. We, we can supply from India to China. Such an engineering project we can supply. This is opportunity we are working on. From here we can supply to Japan, we can supply to Mexico, Brazil, like many countries. So these are the opportunities we are working on. These are the opportunities for which we are gearing up ourselves, and for futuristic we are creating our capacities so it is available at the right time. When we started our expansion of plant 3, which is a chrome steel plant, it was initiated 3 years back. It takes time for establishment of such a investment, such a quality infrastructure. It takes time, and we have taken a lot of efforts to stabilize our line, to create capacities which is of next level of requirement. When a customer comes, when I describe to him that okay, we are creating such thing, they itself appreciate it. Okay, you are creating this sort of a capacities, this type of infrastructure. Itself is a thing. I can give you one example, very small example. For steel ball checking, you need to have a testing requirement, which is we are currently having. Probably globally, we are one of the few suppliers which we are having at the start of the plant. So this type of testing facility is not available, and when a customer knows, okay, you have this particular testing facilities, it's obviously you are a quality product, you are a competitive product, you are a very reliable supplier. What else customer needs? So we are giving all the solutions to the customers, and our focus is very clear. My team is geared up. Whenever you want to visit, can visit us, not a problem at all. Please take a time appointment because and then visit us. But then we are very clear drive for futuristic, and there is no going back on that. Thank you very much, and we close for the day.
Thank you. Thank you to the management, and thank you to all the participants for joining on this call. This brings us to the end of this conference call. Thank you.
Thank you very much.